right, we have a bunch of people that are getting signed in. We'll get started here in a minute. I'm going to give it just a little more time until I stop seeing the participants flow in. We still have people joining. All right, well, let's keep ourselves on track here on time. We are at the top of the hour, so let's get started. Thank you, everyone, for joining our call today. I'm Rob Saunders, EVP at Sierra Pacific Wholesale. We're here today for another peak performance training for our broker and correspondent partners. Today's topic is all about the secret to a stress-free condo loan, specifically government condos. With affordability an issue for so many in the market, condos have become even more desirable for many first-time homebuyers. Sierra Pacific's condo team is best in class, and we wanted our partners to get another chance to meet our condo team. So I'm very proud to introduce Karen Nash, our condo project underwriting manager, and Keisha McLennan, our condo project underwriting specialist. These two have taken Sierra's condo experience to the next level. They truly are experts and will exhaust every effort to help get your condo or condo project approved. Karen will be presenting and taking over from here. Keisha will be answering questions from the Q&A box. Please use the Q&A box for questions. If we're unable to answer your question live, we'll do our best to get back with you at the end or after the webinar. And this presentation will be recorded and posted to our Express Loan training library after the presentation. So Karen, thank you for providing this value add to our partners. You can take over from here.
Thank you so much, Rob. Thank you everyone for joining us today. Good morning and good afternoon. Whenever you're ready, Jessica, we can feel free to move on to the next slide, please. So today, the purpose of this presentation is to basically to provide an overview and understanding of government underwriting. This presentation will explain the official policy issued by the Department of Housing and Urban Development, and we'll also touch on VA loan guarantee as well. As you know, or may not have known, but Sierra Pacific is now open to completing condo reviews for VA acceptance. Next slide. Within the presentation today, I've just added some common terms and definitions for condo project review, just so you guys have a general idea of what the terms mean. A condo project is basically a project in which one family dwelling units are attached. They can be semi-detached, often known as site-detached condos, manufactured housing units, and in which owners hold an undivided interest in the common elements. Some of the common elements that most condominium projects may or may not have are facilities including underlying land and buildings. That would include driveways, parking areas, elevators, hallways, recreation areas, as well as landscaped areas and other elements described within the condominium declaration. A condominium unit is often referred to as real estate consisting of a one-family dwelling unit within a condominium project. Next slide. The process to determine a condominium project's compliance with FHA's condominium project approval requirement is basically known as the condominium project approval process. An approved condominium project is basically a condominium project that meets FHA condominium project approval requirements. It's determined by review under which a DELWRAP approval process would be issued by a lender, or the HRAP approval process, which is approved directly by HUD. A condominium association is basically the organization, regardless of its formal legal name, that consists of homeowners within a condominium project or the purpose of managing the financial and common area assets. Next slide. Here at SPMC, we will allow for approvals on condominium projects that may have already been approved by HUD directly, which is known as the HRAP approval process, a project in which we can approve a single loan for a condominium unit, which is often referred to as the single unit approval, or a site or detached condominium project that meets the standard definition of a site condominium. Some condominium units not requiring approval would be HUD real estate owned mortgages, streamline refinances, or a condominium project that meets the site condominium requirements. Just note that insurance must also meet the current guideline requirements. Those are things that we do look at to ensure that the project still meets insurance within today's requirements as determined and defined by HUD. Next slide. Within the next slide, what we're going to do is basically talk over the loan level certification process, which is one of the requirements for units and approved projects. When we have a project that's already approved by HUD, as a lender, we must verify the requirements for individual units located within that condominium project or legal phase by completing a loan level certification that confirms that the project is still eligible to be approved under the HUD review approval process. Us, the mortgagee, must confirm that the condominium project is listed as approved at the time the case number is ordered. In order for us to accept that already approved project, we must adhere to the FHA concentration limit, which is maxed at 50%. Now, that's just for already approved projects. The FHA concentration limit would be slightly different for single unit approvals, but we'll talk about that later on in the presentation. Next slide, please. In order for us to complete our loan level certification, we will request information that's basically already listed on the single unit approval questionnaire, which is often known as the HUD 991 form. That questionnaire is actually used for both the loan level certification as well as the SUA. This form is used to address a set of questions, which is basically designed to collect pertinent condominium project information and unit information for FHA insurance endorsement. The section for the loan level certification is basically referred to in section 3 of the HUD 991 form. These questions are required to be answered in order for us to accept that project for its current approval. We're looking at occupancy requirements for construction type. The minimum occupancy requirement would have to be at least 35%. And note, when you're talking about single unit approval, it's 50%. So we can't get the two confused. We're only looking at the minimum of at least 35% when we're talking about a project that's already approved by HUD. Individual owner concentration, which is often referred to as single entity. Any project with 20 units or more, the individual owner concentration must not be 10% or more. Well, more than 10%, let's just say. Condo projects with 20 units or less, a unit owner may not own more than one unit. The property information, which is 3C of the HUD 991 form, the leasehold interest. We must identify whether it's been a gut rehab conversion, new construction, or manufactured home. Just keep in mind that SPMC does not currently lend on leasehold or manufactured homes. We must also confirm delinquencies, units in arrears. We can't have more than 15%. Also note that this is just required for 60 days or more delinquent units. We don't look at the 30 days. And again, insurance requirements. The condominium project must be insured by FHA standards, as well as any applicable state and local condominium requirements. Next slide, please. This section of the PowerPoint presentation gives you a screenshot of what the HUD 991 form looks like, and I've highlighted here section 3. So if you do have a copy of the HUD 991 form, anytime you have a project that's already approved by HUD, we will confirm and ask you to refer to these questions within this form, which is section 3. Next page, please. Just to keep in mind, when we're doing our loan level certification, HRAP review will always confirm insurance requirements. Walls and insurance often refers to insurance that covers the interior of the unit and personal property inside the unit. The mortgagee must verify that the borrower has obtained a walls in policy, HO6, if the master blanket policy does not include the interior unit coverage, and that would also include replacement of interior improvements and betterments coverage to ensure improvements that the borrower may have made to the unit. Next slide. We'll also confirm that the HOA has sufficient hazard insurance requirement, and keep in mind replacement cost value. As you know, within this market today, we've been seeing a lot of changes within insurance. So it's important that we keep to the standard of 100% of the insurable replacement cost. Anything less than 100% would not be considered acceptable. Next slide. In addition to confirming 100% replacement cost, sometimes we'll see associations that have what is known as co-insurance. So basically, the mortgagee must verify that any policy with a co-insurance clause includes an agreed amount endorsement or selection of the agreed value option. The amount of coverage to fully cover the insurable replacement cost must be at 100% of all units and all insurable common elements within the condominium project. Sometimes we'll see master policies that have pooled insurance. The mortgagee must basically verify that the pooled insurance policy satisfies the insurance coverage standards for each condominium project insured under the policy. So this basically states that, and I'm not sure that if anybody is familiar or not familiar, but basically pooled policies are policies that's pulled by multiple homeowners associations onto one. It's a shared cost. But for HUD, we have to ensure that our specific association, when listed, has a carved out amount for that specified policy. It's a little bit confusing, but it's something that we can look at and make a determination on if the policy would meet HUD's requirements. Next slide. So basically here, the mortgagee must verify that the pooled insurance policy satisfies the insurance coverages standards for each condominium project insured under the policy. The insurance policy must list the condominium association as a name insured, or in the case of an affiliated approved condominium project or association, the name of the affiliated project or approved condominium project or condominium association may be listed as a named insured. Again, if the association has a policy that's pulled with other affiliated condo projects, we must have a carved out amount for the insurance. It can't just be one blanket amount, but they have to specify the actual dollar amount that our association would be covered for. Next slide. Flood insurance is also something that we look at, if applicable, for loan level certification. And basically, the flood insurance refers to insurance that covers physical damages by flood. The mortgagee must verify that the units in an approved condominium project is located in a special flood hazard area to meet the insurance requirements in the condominium project approval section of the handbook. Next slide. Flood insurance coverage, it has to be equal to the replacement cost of the covered improvements for the NFIP maximum or the NFIP maximum per condominium unit of 250K. Flood doesn't allow for supplemental policies, so if the association is only insured for 80% of the replacement cost coverage, the policy would not be acceptable. Unlike conventional lending, where a borrower can actually obtain supplemental coverage, they can make up the difference between the 20% to meet that 100%. But for FHA, they have to at least be at 100% replacement cost for the flood insurance or meet the maximum per condominium unit, which is 250K. Next slide. Under the HRAP process, we often see HRAP approvals issued by HUD for new construction. So this slide just basically gives you some general overview of what new construction may or may not be eligible for. When we're looking at a new construction project for HUD, what's not eligible is proposed construction, which basically refers to a property where there's no concrete or permanent material that's been placed. Properties under construction refers to the period from the first placement of permanent material to 100% completion with no certificate of occupancy or equivalent. New construction projects may be eligible for approval if the properties existing less than 1 year refers to a property that is 100% complete and has been completed less than 1 year from the date of issuance of the certificate of occupancy, or the property must have never been occupied. Next slide. A condominium project or legal phase consisting of units that are existing less than 1 year and that are already for occupancy, including completion of all the infrastructure of the condominium project or legal phase, and is not subject to further rehabilitation or construction. Next page. Under HRAP, when we're submitting for new construction, we have to make sure that we meet pre-sale requirements. For an existing construction, the acceptable level of owner occupancy percentage has to be at least 50% of the total number of units. The other exception with that for that percentage would be for existing constructions that are greater than 12 months old with an owner occupancy percentage of at least 35% and less than 50 are eligible for approval with the exception below of no more than 10% of the total units being in arrears. This does not include any late fees or other administrative expenses. New construction with complete condominium projects. For complete condominium projects and gut rehab conversions, the acceptable level of owner occupancy percentage can be maintained at 30% of the total number of declared units in the condominium project. Next slide. Another property type that we could consider for HRAP approval would be gut rehabilitation. So what that basically refers to is the renovation of a property, which is down to the shell of the structure, which would include the replacement of all the heating, ventilation, and air conditioning units and electrical components. A non-gut rehab would be something that is just basically nothing's been stripped down to the shell, of course, and rebuilt, but anything that's considered cosmetic, that would not be acceptable for HUD approval. Next slide. This next presentation or next topic is going to be single unit approval, which is also known as SUAs. Some people do still refer to them as spot approvals, but that would be incorrect. They are known as single unit approvals. Next slide. The single unit approval definition is basically a single unit approval refers to the approval of a unit in a condominium project that is not in an already approved condominium project. For single unit approvals, that process itself is only for that single loan. It doesn't approve the entire project. If you have more than one loan that you're trying to do for a single unit approval, you're going to have to process them separately. We must confirm that the condominium project is not on the list of FHA approved condominium projects, in which case, if the project's already approved, we just order a case number and do our loan level certification. Next slide. For borrower eligibility, to be eligible, the mortgagee must verify that the mortgage application received an accept from total mortgage score, or if manually underwritten, has a maximum loan to value of 90%. Now, the max LTV is 96.5% with an accept from total mortgage score. Next slide. For property eligibility, the mortgagee must confirm that the condominium project has a certificate of occupancy or equivalent for all units in the complete condominium project or complete legal phase, which oftentimes if the project is already established, we're not going to verify if they have a CO or not. Obviously, if it's been turned over, then it's considered established. The number of units has to be 5 units or more. 2 to 4 unit projects do not qualify for single unit approvals. Those would have to be submitted to HUD directly under the HRAP review. We also have to confirm that it's not a manufactured home and doesn't have any ineligible characteristics. Next slide. Ineligible property characteristics would be considered cooperatives ownership, condominium hotels or condotels, any project that has a mandatory rental pooling agreement that require unit owners to either rent their units or give a management firm control over the occupancy of the units, and no timeshares or segmented ownership allowed. Next slide. Additional ineligible characteristics would be multi-dwelling condominium units, basically one dwelling that holds a single multi-dwelling units are basically two units that are held under one mortgage. Those would not be allowed. Houseboat projects, continuing care facilities, and projects in coastal barrier resource areas. Next slide. For FHA insurance concentration, earlier we said that for HRAP, 50% would be the max. So for SUAs, 10% of the total number of units in the condominium project for condominium projects with 20 or more units. For condominium projects with less than 20, the number of FHA insured mortgages cannot exceed 2. Again, FHA insurance concentration max is 50 if it's completed under the HRAP process and 10% for single unit approvals. Okay, owner occupancy. The condominium project must have 50% or more total number of units is owner occupied. The individual concentration, also known as single entity, cannot be more than 10%. For projects consisting of 20 units or less, no more than one entity can own more than one unit. The HOA has to have or have been turned over by the developer. Next slide. Financial stability. Units in arrears must not be 60 days or more delinquent. And the association basically can't have any kind of financial distress event. We must verify the financial stability of the condominium project, and the condominium association confirms that they maintain separate accounts for operating and reserve funds. They have to have a reserve account for all capital expenditures and deferred maintenance that is funded with at least 10% of the aggregate of 12 months of unit assessments. Special assessments, that's something that we do look at on a case-by-case basis for SUA approval. But if the special assessment is excessive, we will send it over to HUD for their blessing. But most of the time, anything excessive would be considered a financial distress event. Next slide. A financial distress event refers to a condominium project or builder developer that has sought protection under bankruptcy laws, been placed into receivership, been subject to foreclosure, or deed in lieu of foreclosure. Next slide. For SUAs, we will consider properties with commercial space, or also known as non-residential space. The commercial space must have independence. It has to refer to the ability of the residential and commercial portions of the condominium project to be independently sustainable, such that neither portion of the condominium project is financially reliant on the other. Next slide. For condominium projects with commercial space, the mortgagee must submit the current budget, a year-to-date income and expense statement within 90 days, an income and expense statement for the previous year's actual year-end results, and a current balance sheet, which is dated within 90 days prior to the date of submission. Next slide. Commercial space refers to the floor area allocated to retail and commercial square footage. This would exclude live-work units. The mortgagee must verify that the condominium project's commercial non-residential space does not exceed 35% of the condominium project's total floor area. Next slide. Residential space refers to the floor area allocated to all unit square footage. the building common area square footage exclusively for the use of residential unit owners, and all parking garage square footage allocated to residential unit owners. Next slide. For HRAP and SUA, HUD will accept live work units, but the mortgagee must verify that the individual work unit does not contain more than 49% of commercial space. Some examples of live work units would be considered like artist studios or private practices such as bookkeeping, any kind of practice that an individual may have for their home-based business. Next slide. We will consider some litigation for single unit approvals, which basically refers to a current or pending lawsuit or proceeding in court, arbitration, or mediation involving the condominium project or association. Those concluded within 12 months of the application date. Litigation does not include foreclosure or actions to be collected for past due assessments brought by the condominium association or the condominium project as a plaintiff. We just have to be sure that the litigation makes sense, that it's considered minor, and doesn't relate to any safety, structural soundness, habitability, or functional use of the condominium project. Next slide. This is just a list of documents needed for litigation. So basically what we'll condition for is the HUD 992 form, the reason for the litigation, the risk of the litigation, any anticipated settlement judgment date, if any, sufficiency of insurance to cover the payout for the settlement, and what impact of the litigation does that have on the condominium association in the future. Next slide. So for single unit approvals, I've listed here the required documents needed. We'll condition for the HUD 991 form, but just keep in mind the HUD 991 form is actually used as a mortgagee certification form. Like I said, those questions are directly related to the mortgagee to confirm information on that association. We will take a third-party lender questionnaire, and we will complete our own HUD 991 form. Oftentimes, the HOAs will complete the form for us, but at the end, we're the ones certifying it, so we'll have to certify it ourselves at the end of the process. So along with the HUD 991 form, we'll ask for the budget, the current balance sheet, financial information. It's only required when there's commercial space in the building project, but for the most part, the only financials that we'll ask for the single unit is the budget and the current balance sheet. We will ask for the recorded master deed, CC&Rs or declarations, the recorded bylaws, and of course, insurance is always required, hazard, liability, and fidelity bond. Next slide. We will conduct a site condominium review, but those are oftentimes a condo project review is not required, but what we will do is we'll just confirm that the insurance meets HUD's requirements today. Next slide. We'll skip this slide. This is just a list of documents needed for site condominiums, which is the rider, the appraisal, the certificate of hazard insurance, and if applicable, the certificate of flood. Next slide. For a full HRAP review approval, here's a list of documents that we will request, which is the HUD 992 form, the budget, year-to-date income and expense statements, income and expense statements for the previous 2 years, current balance sheet, and if applicable, any supporting documents for any loans or special assessments that the project may currently have. See here, the recorded declarations, bylaws, rules and regs, articles, affordable housing documents if applicable, management agreement. Yes, we will ask for the management agreement. HUD does require that. We just want to be able to make sure that the association has the right to terminate the agreement with the management company with no more than 90 days notice. That's the only reason why we ask for the management agreement. We don't actually need all pages, but just the section of the agreement that just confirms that the HOA can cancel with no more than 90 days notice. And that management agreement is only required for the HREP approval process. Basically, the amenities cannot be owned by a third party company. So if there's an outside party that owns the recreational amenities, that would definitely be a decline. But if the amenities are owned by two existing associations and they share it in common, then that is something that we will consider. But for most of the time, when the rec lease is owned by like a developer or a third party, that's something that we would not be able to consider for HREP review or SUA review. Another thing to keep note about is leasing restrictions. So for single unit approvals and HRAP, HUD does not want the associations to be able to dictate who a unit owner can rent their unit out to. So it's important to note that within the declarations, if the association allows for any type of criminal background check or credit check for interested parties who may want to rent a unit within that association, that would not be acceptable. But the HOA can dictate the length of time or the allowable time in which a unit can be rented for. They can request the names of all tenants. They also have a restriction on leasing units for less than 30 days. Unit owners are prohibited from leasing their units for an initial term of less than 30 days. See here, the association may establish a maximum number of rental units within the project. That's not uncommon, but the most uncommon thing would be the highlighted, which is not allowing for a criminal background check or any kind of credit check or credit worthiness. Next slide. Okay, well, looks like we're down to the end, which I'm pretty surprised about. So we've gone through this pretty quickly. So we have gone over units not requiring approval. We've gone over units in approved condominium projects. We've gone over the single unit approval process. We've discussed the site condominium and HREP review process. Next slide. And lastly, SBMC will now be conducting their VA condo reviews. Just to keep note, the published turn time right now for VA is 30 days. And that's from the time that they receive the actual condo documents for review. VA does not accept rush review requests, and the types of reviews that VA will allow for is 2 to 4 units, site detached, and attached 5 or more units. Now, each regional loan center for VA has different requirements in terms of what documents they do require, but these are the documents listed here are the basics of what VA will ask for, which is the recorded declarations, articles of incorporation, could be the master deed, could be the bylaws, the recorded amendments, the plats, rules and regs, meeting minutes, the currently approved budget, any special assessments, any litigation. Pre-sale requirement, just note, is 70%. And they may ask for a questionnaire and they may not, but we will ask for one just to be able to see if there are any ineligible issues with that project. That doesn't necessarily mean that we won't submit the package to VA. They will make the final decision. It's not up to us to approve or decline the VA review. What we do is just basically take a look at it to see if we think that VA will approve it. But at the end of the day, VA will make that decision themselves. One good thing about VA condo approvals are they don't ever expire. So once it's approved, it's pretty much infinite. So there is no expiration date. Next slide. So we're at the end of the presentation. If you guys have any questions, we can certainly leave it open for questions and answers at this time.
I don't see any questions coming in through the Q&A chat.
I don't see any either. I think we can give people another minute to decide if they have any questions, but just for everyone, and I wanted to say thank you, Karen and Keisha, for the valuable presentation. We hope you all enjoyed the content and send your next condo loan to Sierra Pacific. Here's a question. What is the ETA for HUD?
Well, if we get a full package, once you send it over to the condo team, we can get it over there fairly quickly. So their review process is between 5 to 7 days, but it just depends on the volume. Depending on if they ask for additional questions, we can get an approval within 2 weeks.
Thank you very much. And then another question came through. Is it possible to have a conventional condo training in the near future? And I will say this is not our first time doing a training. Karen was nice enough to do one recently, and that is actually a recorded training you can watch today or anytime you want to. It's in our Express Loan training library. So check that out. And I also want to tease that we're also soon will be on a Arrive Lender Spotlight. We'll be presenting there. Details will come out about that. We will post this webinar also to our training library in Express Loan and make sure the participants get a copy of the presentation. Let's see, another question came through. Are any fees paid by the borrower? I think that's where you got to be careful. If you need to make sure that you're not collecting any fees before compliance or the intent to proceed's been collected. Anything else you want to add on that, Karen?
That I'm not really sure about, to be quite honest with you, but I would assume that it's not. I don't believe it would be acceptable, but I'm not sure.
Yeah, it really depends on the transaction and also depends on what the charge is for. Typically, those will be paid by seller if it's a purchase transaction. All right, well, thank you all again. Please stay tuned for our next peak performance training from Sierra Pacific Wholesale. Have a great day. Make it productive. Thank you, everyone.
Thank you.